Good morning, welcome to today's update. Having been a quiet start to the week, much more going on yesterday. I'm going to start off with SPPI Spectrum, which is a long position from back in early August here, around the $9 mark. Said yesterday about how it finally formed support, daily support 1309, and right on cue rallied another 30-40%. Was some profit taking signals there, so we hit 3 up at 21.54, so some more profit taken there. It's worth noting that the option position, which was a $9 call that cost $1, is now trading effectively over 1,000% higher. Really, it's gone up 11 times. So in terms of where it's gone in terms of its risk. So much higher. There's a long position in the stock and those options as well. It was a long-awaited conference call in Japan, so it wasn't an unexpected day for news. One thing just to remember, done a lot of work on biotech over the years about technical price action in relationship to where you are in phase trials. Spectrum's got a lot of phase 2 to 3 trials, which is normally the most explosive part of any trend. So we're one of the reasons why we got along in the first place, apart from the big breakout signal to do with time area studies as well. So Spectrum looking very good in terms of the year's performance. It just shows that one trade, this is representing when we're only risking 1% on any one trade. This particular trade is now returning around 15. So if people have gone in higher, then obviously the returns are considerably more than that. While stocks simply grind higher in very low volatility in terms of the indexes, bond markets, which for us have been bearish all year, and we had the major move early on in the year. This is T-bonds, just going to highlight what was the buy at the low of the year, so a monthly support. We had a bullwhip signal with pops and UF and time continuations, but in the bigger picture it's still a bear market, and yesterday a time continuation signal came in. This was matched by signals on the ultra bonds, 10-year notes in Europe, BTPs, bunds, so a lot going on bond markets there. So clients and customers looking to reactivate shorts in the bond market area, including corporate customers. There's some ETFs that you can use to get involved in as well. However, if we look at the intraday chart, we had this major support of 1 at 52.30, which was really from a zone from 153.02. We did pop below it very briefly on just when the US stock market opened, but we didn't close below it. So really, to open up space for acceleration, we need to close below this 152.25 level. And if I was to look at things like Europe, this also highlights that while we've had historical sell signals, there's still some work to be done on the downside. So this is the German interest rate. Resistance has moved to the top, up to quarter day at 360, but we still have this 161.68 level. There's a chance that might move higher at 1 o'clock today, UK time. So I'm watching that, because if it does, suddenly it opens up space for it to fall. So bond market's definitely in focus. And that seems like most of the time, as is gold, topped out at the 1307 monthly resistance at the end of last week on Q, having held a weekly support at 1262 earlier, about a week before. We've broken down, we took out the final half-day support, and really it's just been under pressure. So 1262 is the focus once more, and remember that is a bear trap, which I'll talk about more if and when we get there. Its performance is particularly poor, really, when we look at the dollar index. So the dollar index did go in breakout mode. We talked about the euro as well, but really we retreated yesterday. So in terms of its dollar performance, gold was particularly poor yesterday. 93.09, and now a lower breakout point at 93.65 is the dollar index focus. Kiwi also in vogue, had some central bank statements overnight. I must admit, I neither know nor care what they said. I might take a little bit later. Kiwi has been under pressure on a historical chart, which I'm going to show you in a moment. Thing was that we bounced into the first key resistance at 71.66. Admittedly, 1 o'clock in the morning. Okay, for some of our Asian customers. We've now looking like we've broken down below 71.15. We've had a bounce in the last hour, very early for European trading, and we've failed there. If we look at that historical chart, that was the reason why they got involved at 71.66. Had a time continuation. The trend is already down because this black square is lower than the previous one. We also had a minor steps ending on the 120. Historically, support 68.62. So Kiwi under pressure. The other major signal that came up in the currency space was Euroyen. Euro sort of fundamentally has a lot of problems because it hasn't got a lot of friends at the moment because of Catalonia. Who knows what will happen there. We don't really care though because we've had a double continuation as divergence. So the trend is already up and we get a signal to say that it's restarting. Also closed above the third deviation up on the range deviation pivot. Shows an expansion of range. If I then go to the intraday chart, which is, if I go to Kiwi, we were actually alerted to this early yesterday afternoon. So do the scans, daily signals coming up. Let's have a look intraday. Intraday we were breaking up through this 240-minute level at 132.77, and the nearest target is 134.25. So again, people involved in the euro yen. Now that we have extended high, it's very easy to know where you're on. Okay, that's probably it for today.